As of this moment, Datavault Inc., trading under the ticker DVLT on the NASDAQ, is priced at 0.74 USD, showing a positive intraday move of 2.37% today. While most retail traders are fixated on that slight green flicker, thinking they might have caught a bottom after a turbulent start to the year, there is a much more complex story playing out beneath the surface that the charts aren't immediately telling you. You might expect that a company announcing a global launch of a patented AI rating technology with a partner like fintech.tv would be seeing a massive breakout, especially when that technology targets the high-stakes world of media bias. However, the reality is that one of the company's largest stakeholders, Silex Holding Company, has been offloading millions of shares over the last several trading sessions. This massive selling pressure from an insider creates a fascinating tug-of-war between high-level technological progress and the cold, hard mechanics of equity liquidation. It is this tension between the headline-grabbing AI narrative and the structural selling pressure that defines the current risk-reward profile for anyone looking at this stock right now. When you look at the general market sentiment surrounding small-cap tech right now, the expectation is usually that any mention of artificial intelligence or data tokenization should send a stock to the moon. People see the success of Nvidia stock or Apple stock and assume that every micro-cap with a patent portfolio is destined for the same trajectory. That is the common narrative, but the reality for Datavault AI is far more nuanced. While the company is indeed hitting its milestones, such as activating edge network infrastructure in major hubs like New York and Philadelphia, it is also navigating a period of significant dilution and major shareholder exits. This is where the smart money separates itself from the crowd. Most people are using simple investing sites to check the price and hope for the best, but understanding why a major 10% shareholder would sell nearly 16 million shares at an average price just above 80 cents tells you more about the short-term ceiling of the stock than any technical indicator ever could. The recent trading volume for DVLT has been remarkably high, frequently crossing the 90 million share mark, which is well above its historical averages. This suggests that the stock is currently a battleground. On one side, you have the buyers who are excited about the 2026 revenue guidance being raised from $50 million to $200 million. That is a massive jump that catches the eye of anyone involved in online investing or looking for high growth opportunities within their individual brokerage account. On the other side, the institutional activity shows a more cautious approach. While firms like Vanguard and JP Morgan have established small positions recently, the sheer volume of shares being dumped by Silex acts as a persistent anchor. If you are using a Fidelity trading platform or the Robinhood app to track these movements, you've likely noticed that every time the stock tries to sustain a rally past the 80-cent mark, it gets swatted back down. This isn't just random volatility, it is the market absorbing a specific, large-scale exit. Looking at the intraday swings, we see a pattern of early morning strength followed by midday consolidation. This often happens when retail traders using SoFi Active Investing or Robinhood fractional shares buy into the morning news only to find that larger sell orders are waiting at the key resistance levels. It's a classic case of the market narrative clashing with institutional reality. The company just presented at the ICR Conference 2026, where CEO Nathaniel Bradley laid out a vision for real-world asset tokenization that covers everything from gold and diamonds to rare earth metals. For a self-investing enthusiast, that sounds like the ultimate growth story. But the market is currently demanding proof of execution. They want to see those high-margin licensing fees actually hitting the balance sheet, rather than just being projected as future targets. This creates a curiosity loop. Can the company actually hit its 2027 revenue target of $2 to $3 billion while currently operating on a trailing 12-month revenue of just over $6 million? If you are managing your own portfolio through interactive brokers or perhaps looking for investment help to understand these wild microcap swings, you have to look at the business model objectively. Datavault AI isn't just one thing. It's a hybrid of an acoustic science division and a data science division. They own the WISA technology, which handles wireless high-definition sound, and the ADIO technology, which uses inaudible tones for interactive polling and spatial audio. This is the tech they are currently piloting with fintech.tv. Imagine watching a financial news segment and being able to see a real-time bias meter on your screen powered by AI that detects the slant of the reporting. It's a compelling product for a world that is increasingly skeptical of media. But from a financial perspective, the question is how quickly that scales into meaningful cash flow. Comment below how many shares of Datavault AI you currently hold and whether you think the insider selling is a red flag or just a temporary liquidity event. To understand where the stock goes next, we have to look at the macroeconomic pressures and the sector momentum. Small-cap tech has been under pressure as interest rates remain a concern for capital-intensive businesses. While a giant like Tesla stock can weather these storms with a massive cash pile, a company like Datavault AI has to be much more strategic. They recently announced plans to expand their data monetization network to over 100 cities. This is an ambitious move that requires significant capital expenditure. They've managed to secure some convertible debt financing, but that brings its own set of risks, specifically the potential for further dilution down the road. For someone using a SoFi trading platform or looking for Fidelity mutual funds for stability, this stock represents the high beta, high risk end of the spectrum. It's the type of play that requires constant monitoring of SEC filings, like the recent Form 13D-A, to see who is moving in and out of the stock. The company's partnership with IBM is another layer to the story. By leveraging IBM's Watson X platform, Datavault is trying to position itself as a leader in enterprise-grade AI at the edge. They're talking about capturing a share of the insurance, healthcare, and financial sectors. This is the reality that the bulls are betting on. They see the current price as a massive discount relative to the intellectual property the company holds. They look at the 52-week high of $4.10 and see the current 74-cent price as a spring-loaded opportunity. But again, the expectation of a quick recovery has to be balanced against the reality of the Silex sell-off. Until that selling pressure is fully exhausted, the stock may continue to trade in this tight, frustrating range, regardless of how many positive press releases are issued. For those of you using Fidelity mobile app or Robinhood Investments to build a long-term position, it's worth noting that the company's current ratio sits at 0.68. That indicates some near-term liquidity tightness that they are clearly trying to address through their aggressive revenue targets and licensing models. The upcoming distribution of warrants on February 21, 2026 is another catalyst to watch. These warrants have a specific condition. You have to hold at least one Dream Bowl Meme Coin 2 token to exercise them. This is a very unconventional move that blends traditional finance with the world of Robinhood crypto and Web3 digital assets. It's the kind of thing that makes traditional analysts at a Fidelity wealth management firm scratch their heads, but it might appeal to a new generation of investors who are comfortable with tokenized ecosystems. The core of the Datavault AI value proposition lies in its ability to tokenize what they call real-world assets. They aren't just looking at digital data, they're looking at physical commodities. In recent calls, management has discussed dozens of contract negotiations worldwide for tokenizing assets like carbon credits and agricultural products. This is a massive addressable market, but the bridge between a negotiation and a revenue-generating contract can sometimes be longer than investors have the patience for. If you are using interactive brokers trading or checking your SoFi ETFs, you know that the market is currently rewarding companies that show clear paths to profitability rather than just top-line growth. Datavault is promising both, but with a negative net margin and significant operating expenses, the clock is ticking for them to show that their 55 to 60% gross margin targets are achievable at scale. If we compare the current situation to the broader market, we see that investors are increasingly moving towards self-investing tools like Schwab Intelligent Portfolios or a SoFi Robo-Advisor to find balance. But for the portion of a portfolio dedicated to high-growth individual brokerage picks, DVLT is a classic show-me story. The company is present at all the right places, from the ICR conference to IBM Think 2025, and they have a patent portfolio that touches on everything from holographic displays to quantum-encrypted data tokenization. The technicals show the stock is currently trading below its 200-day moving average, which often acts as a ceiling until a major fundamental shift occurs. For the people who believe in the vision, this is a consolidation phase. For the skeptics, it's a warning sign of a company that is better at generating news than it is at generating sustained equity value. What's interesting about the current 0.74 USD price point is how it sits right in the middle of a very wide 52-week range. We've